Hi everyone. Welcome to another exciting episode with me, Asha, on your favorite YouTube channel, Stock Options and Futures. So, I just wanted to give you a glimpse of the Gann masterclass that we have, and just wanted to talk to you a little bit about Gann so that people who do not know about Gann uh, get get to know him better or understand what Gann is all about. All right, so let's talk about who was W.D. Gann. So, W.D. Gann was someone who ruled the stock markets in the 20th century. You'll be amazed to know that he started trading at the age of 24. And he was the first person to have written something on the stock markets. He has written about 10, more than 10 books on stock markets. Now, he has recorded a lot of his transactions in his book. And what kind of a trader was W.D. Gann? Obviously, he was inspired by a lot of astrology, which he has gathered from India. And he then went on to Egypt, where he studied the pyramids. He understood a lot about the way the pyramids are formed, and there is a lot of study that he did there based on that. Now, he invented the square of nine, which is actually a calculator that was used in those days. He is the inventor of the Gann emblem, the Gann angles, the time cycle theory, right? So he's the first person or the first person to author a book on the stock markets. Now, Gann had made close to $50 million before he died in 1955. So you can imagine what $50 million in 1955 would mean. Now, apart from that, he was also very famous for plotting the tops and the bottoms of the market, and he majorly used mathematical systems, geometry, and astrology to do whatever study that he has done in the markets. So let me also tell you something more about Gann. So he was a member of the 33rd degree of the Freemasonry. So if you do not know what it means, please Google it out and understand what the 33rd degree Freemasonry means. It's the highest accolade that someone can get. And just to tell you, uh, you know, Albert Einstein, Thomas Alva Edison, they were all part of the 33rd degree Freemasonry. So that's the kind of a genius that Gann was. So the degrees start from something like 7, 8, and the highest is 33rd. And that was what Gann had. So that's quickly a little about Gann. Now let me quickly take you to certain important rules that Gann had talked about in his book. So I don't, let me just sort of, uh, you know, try to, okay, I hope you can see it clearly. All right. Okay. So there were 24 rules that Gann talked about. These are very important rules. And at some point or the other, you would have come across these rules. Somebody would have talked to you about these rules. If you do not know these rules, no worries. I'll read it out to you and I'll explain it to you. And I request each and every one of you to take note of these rules. Imagine somebody who has been in the markets, who has been trading so well, who has made a name for himself in the markets. He is talking about 24 rules, right? So you know how important these rules are, right? So the first rule that he talks about is the amount of the capital that you should use. So what does Gann say about the capital that you should use? Gann tells you that the first rule is divide your capital into 10 equal parts and don't risk more than 1/10 of your capital in any one trade. So if you're going to put all your money in one trade, and if that trade does not favor you, you know what is going to happen. So obviously, all your 10 trades not going in your favor is going to be a very rare phenomenon. Obviously, you should divide your capital into 10 equal parts so that you risk only 1/10 of your capital on that particular trade. So 10 trades working against you is something that's not, you blowing up your capital by dividing them into 10 trades is going to be like a very, very rare scenario. So this is something I think all of you would have heard about, where a lot of people would be practicing, right? So this is something Gann had written in his book, and when he was, what was the time period in which he was trading. All right. The next rule that Gann talks about is use stop loss orders. Always protect your trade when you make it with a stop loss order. Keep your stop loss order at least 3 to 5 points away. Obviously, you have to modify this to suit the current fluctuations or the current, volatility that we have in the market. But the underlying is, do not trade without having stop loss orders. You need to have a stop loss order. That's the reason you have a stop loss order that your broker gives you. So do not trade without a stop loss order. The next thing, the third thing that Gann talks about is never over trade. I know most of you would have heard this. A lot of you may not be practicing it. You might be in profit in the morning. In the afternoon, you would have traded one more trade, and that would have actually eaten away your morning profits. Then to cover that up, you try and take a few more trades and you end up making losses, and you close your day in loss. I'm sure most of you can relate. I was also once upon a time like that, where I would overtrade. But I realized that overtrading is not a solution. You have to close your laptop once you have done with your morning trade, or once you've done with a profitable trade. Close your laptop, right? Do not overtrade. You need to define what is going to be you need to define what is going to be the number of trades that you need to take at a given point in time. You need to wait for your trades and pick that right trade and avoid over trading. You need to be patient, trade when it comes to you, and then close it when you have booked your profits and when you're in profits. Do not over trade. Now, the next point that Gann talks about, I'm sure most of you would have heard this, but this is very, very important, and hence I'm going through it all over again. The next point that Gann talks about is do not let your profitable trade run into loss. I'm sure most of you can relate to it. You have a profit and then you do not trail your profits, and after that it goes into a loss. Then you wait so that, okay, let my profit come into, at least let it be cost to cost, and then I will exit it. And then you keep waiting and waiting and waiting, and then your profitable trade ends up into a loss making trade. So point 4 is never let your profit run into loss. You have to raise your stop loss. You have to trail your stop loss. Please, please, please remember to do that. Okay, the next point is do not buck the trend. Now, what does that mean, right? You should always and always trade only when you are sure about what is the kind of the trade that you're going to take, right? You should never trade if you're not sure about the trend or what your chart is telling you. Now, most of you might think that, okay, we're talking about Gann, and why is Gann talking about never buy or sell if you're not sure of the trend according to your charts? It's very important. Please understand, even though there is astrology, even though there is mathematics, everything boils down to numbers and the trend that you see on your charts. You are having an additional benefit. You're having an edge over the normal technical analysis, where you know where, at what level, and at what time you need to buy or sell. So you have an additional benefit, or you have an additional, what do you call it, edge over the other technical analyst. So it's very important that if you're not sure about your trend, if you're not sure about your charts, do not trade. All right. Now, the next most important thing, which almost relates to what point number 5 talked about, is if you are in doubt, get out and don't get in when you're in doubt. If you feel that, okay, this trade is not something that I'm comfortable with, Do not let it run into a loss-making trade. Just get out. If you're not sure about your trade, get out of your trade, right? Point number 7. I'm sure most of you would have heard about me telling you that please trade only in active stocks. What does that mean? I've told you a lot of times that if you want to trade in options or if you want to look at certain stocks that you want to get into, please ensure that there is sufficient liquidity. The things that we are talking about right now as best practices, these have been there since ages. So isn't it wise enough for us to understand these and practice this and sort of imbibe these into our day-to-day trading life? So Gann clearly tells you that trade only in active stocks. Keep away the dead or the slow stocks. So be very, very careful when you're picking a stock. Now, next important thing. Again, this very much relates to the point number 1 that we talked about, where we talk about division of our capital. Gann clearly tells you equal distribution of risk. Trade only in 4 or 5 stocks. Avoid trying to put all your capital in one stock. The next thing that Gann talks about is, see, there are a lot of times we say that, okay, at this price is where I'm going to take an entry. Sometimes that price may not come. That is when you will have to take it at market orders. If you're sure about your trend, if you're sure about your trade, if you're sure that this is what you're going to do, then you should never limit your orders. Buy it or buy or be sell. You trade at market because you know what you're doing. You know you've defined your risk. You've defined your targets. You know your chart. So you trade at market. Now the next point number 10. You always need to have a stop loss to protect your profits, but at the same time, do not close your trades without a proper reason. Sometimes what we do is, we know that it is a particular stock is going to go from, say, 10 rupees to 100 rupees. But when it reaches 20 rupees, when it reaches 30 rupees, you start feeling restless and you feel, no, let me close this trade. So you're actually killing the hen that's giving you golden eggs. Unless you don't have a proper reason to close your trade, do not close your trade. Trail your stop losses and do not close your trade unless you have a sufficient reason or a good reason to close your trade. All right, let's move on. Point number 11, accumulate a surplus. After you've made a series of successful trades, put your surplus money that you need, put some money into a surplus account that can be used only in emergency or in times of panic. Very clear? Next, don't buy just because the stock is giving you dividend. Just because a stock is going to give you dividend, do not put your money in that stock. Obviously, if you're going to put money in the stock market, your capital also needs to go up, and your capital will go up only if your stock appreciates. So just because a particular stock is going to give you dividend, do not put your money just because it's a dividend paying company. It also needs to go up. I'm sure most of you know examples. Next, the most common mistake that we do: never average a loss-making trade. That's one of the worst mistakes that a trader can do. I've heard a lot of people say, I averaged put options. Biggest mistake. Don't ever do it. Never average a loss-making trade. Now, again, point number 14, same as what we discussed a little earlier. Never get out of the market just because you've lost patience. Patience is the key to the market. And don't get in because you're anxious and you feel you're going to miss the so-called FOMO that comes into you. Oh, I may miss this trade. It's okay, even if you miss a trade. If your target is defined, wait for it. Have patience. By the way, trading makes you, teaches you a lot of things. It teaches you, it makes you a better person is what I think. It teaches you a lot of patience. It teaches you to wait. It teaches you to be, wait and look for the right time before you do something. So there are a lot of things that trading actually teaches you. Now, point number 14 is to not get out because you've lost patience, or get in because you feel that, oh, I may miss something. Okay. Point number 15. This is something that I'm sure most of you can relate to. I've also done this earlier. We take out small profits, and then when it's losses, we keep waiting and waiting and waiting. I'm sure most of you can relate to it, but just imagine these are simple things that we need to follow, right? And these are things those are written by Gann himself. He's pointed it down, which means these are the problems most traders face, not just you and me. Every trader would have gone through it at some point in life, right? So avoid taking small profits and big losses. Okay. Next thing, point number 16. I'm sure most of you will know that. Most of you can relate to this also. We would go and cancel our stop loss order after placing it. Never, never do that. All right. Point number 17. Most of you would have heard me say, don't make your broker rich. That's precisely what Gann is telling you. Avoid getting in and out of the market too often. Take those one trade, two trades, which give you the maximum, rather than going on trading multiple times in a day or multiple times in a week, right? Don't make your broker rich. We are trading so that we can get rich, not the broker. All right, point number 18. Some people say, I'm not comfortable selling or shorting the market, right? You just need to follow the trend, be it a buy, be it a sell. If market tells you buy, you're a buyer. If market tells you sell, you're a seller. Now, just look at all these things that Gann talks about. He's never telling you that you use this astrology, you use that astrology. He's just giving you certain discipline that you need to follow. Whether you use Gann methods, whether you use any trader, if he remembers these points, he can be a successful trader, right? These are things we all know, but we hardly practice. All right. So avoid getting in and out of the market too often, right? Now the next point was, be as willing as to sell or short the market as you are to buy, right? You have to follow the trend. Okay. Next point, number 19. I'm sure you can relate to it. Never buy a stock just because the price of the stock is low, or sell a stock because it's too high. I think we all do this. We sell because we feel, oh my God, it's doubled. Oh my God, it's tripled. Oh my God, it's gone up again. Let me just book profits. It's your golden, egg laying hen. Don't kill it, right? Never, never sell a stock just because you feel, oh my God, it's just rising and rising and rising. That's okay. Trail it. That's what Gann tells you. Okay. Let's move on and see what else is it that Gann has said. Yes, point number 20. Everybody talks about pyramiding a stock. But when do you pyramid? Right? It has to be in the trend. I talk about trend. I talk about price action in all my videos. I talk about price action in everything that we, in our live sessions. Why? Because if you're pyramiding a stock, you need to wait for it to cross the resistance, and then you go ahead and pyramid your stock. Similarly, if you're going to sell, and if you're going to sell more, it has to break out of the distribution zone. It has to come into the sell side for you to sell more. So pyramiding, the timing is very important. Again, the timing here, Gann is not talking about his timing. He's not talking about astrological timings. What he's saying is simple thing that you follow the price action. You don't pyramid at the wrong time. You don't sell when the stock is not broken its major resistances. You increase or pyramid your positions only at the right time, right? All right, let's move on. Select the stocks with small volume of shares outstanding to pyramid on the buying side, and the ones with the largest volume of stock outstanding to sell short, right? So when you are buying, you need to ensure that you are getting into a stock where the volume is small initially and then it is going up. And when you're shorting a stock, you need to ensure that you pick up the ones with the largest volume of the stock outstanding to the sell for sell. So this is something that is very, very important. Let's understand this again. What is Gann telling you, right? Gann is telling you that you should be very, very clear that when you buy a stock, the volume of the stock is increasing and there is more volume coming into the stock, which is increasing from the smaller volume to the higher volume. And when you're selling, it's already reached its peak. And from there, it's going to drop. That's how you identify your buy stocks and your sell stocks. Now, point number 22 is something where Gann says never hedge, right? Now, here, do not misunderstand this as the hedging that we do right now, right? What Gann tells is if you are long in one stock and it starts to go down, just do not go and sell another stock and say, oh, this stock is going down, so let me go and sell another stock just to hedge it. So this is what Gann means here by hedging, not the current hedging that we are doing in the markets. So do not misinterpret this sentence of Gann where he says never hedge. He says just because one stock you've bought and that is going against you, don't go and sell another stock and say, oh, I'm hedging it because this is long and this is going to be short. Never do that. All right. Take the loss, wait for another opportunity, and then get into another trade. That's it. As simple as that. Don't misinterpret this hedging part. It has got nothing to do with the current hedges that we take. All right. Hope it's clear. Let's move on to point number 23. Just don't change your position in the market without a good reason. When you make a trade, let it be there for a reason or according to some definite plan. You need to have a plan. You need to have an indication of a change in trend without which you should not go and change your trend. Very, very important point. Lot of people in the last few days have been talking about shorting the market. Give me one good reason to short the market. Did you see any shorting happening? Did you see the prices close below the previous day's low? Not a single day. Why do you then need to, change your plan? Was there a trend change in between? No. Was there an indication of a trend change? No. Then why do you want to change your reason? Just because the market has rallied, you feel, oh, the market has rallied, so let me go and short the market. No. Don't change your position in the market without a good reason. All right? Avoid increasing your trading after a long period of success or a period of profitable trades. Always keep your quantity minimum. Not like today I did 5 lots and I was profitable. I've been continuing to doing, I'm continuing to do 5 lots and I'm profitable. Suddenly I increase my lot size and I make it 100. No. Always trade within the limits. Avoid increasing your trading. Don't increase your trading. Just because you saw success, just because you have a lot of profitable trades, do not increase your trading. Right? These are certain vital rules that Gann says don't violate. These are nothing that is rocket science. Simple, normal rules that each and every trader should follow. And this is something that is written by Gann himself. And imagine when he has written it. If you follow these 24 rules, let me tell you, you will be a profitable trader. Very, very, very important 24 rules. Hope you understood them. I'll come back with more such small, extracts from the books of W D Gann, from he himself, so that you will understand that Gann is not just about predicting the market. It's all about discipline. First, discipline. All right. Thank you so much. Hope you all had a wonderful time watching this video. Take care. Bye. And do follow all these 24 rules. See you. Bye-bye.